first of all, stranded assets, I think we clearly have to acknowledge that we are looking at it from a transition risk point of view. So if we talk about transition risk and the point in time where your property might be exposed to severe transition risk, which is the point in time where your asset is stranded, we don't mean that you completely need to write off your asset value, but of course you are exposed to the risk that maybe your property is not in line anymore with the market expectation in terms of energy efficiency. It might have too much CO2 emissions, and it might be exposed to, of course, upcoming regulation to a great extent. And that's why you are exposed to transition risk and have stranded asset when your property is crossing the line within the CRREM tool, which means you are not aligned with a 1.5 degree transition scenario anymore. I think it's important that we acknowledge that, of course, ESG related data and especially data on energy and carbon becomes more relevant for financial decision making, and that's why, of course, you want to be bulletproof in terms of the data that you're providing to stakeholders, and that's why you need certified data, assured data. It's basically the same story that we do have for financial data already. You wouldn't trust a balance sheet that has not been audited. Yeah, we've been working a lot, of course, on the real estate sector as a whole and provided for different use types and countries decarbonization pathways. We do offer decarbonization pathways dedicated for hotels, but obviously even within that subsector you have a wide variety of hotels, 1-star, 2-star, and we felt that it would be necessary to have more granular advice for the different segments, and that's why we teamed up with EEA to make sure that we have the right resources for that specific subsector. I think we have to differentiate between what's relevant for CRREM, for our initiative, and what's relevant maybe in the broader ESG topic. For us, we have the sector guidances for hospitality, logistics, and other subsectors on our agenda because we feel that we need to be even more granular for these specific uses. And then again, we are focusing very much on Asia Pacific and America, as well as Australia in terms of our regional focus. We want to have a bigger footprint in India and China as well. So that's on the agenda for CRREM. And with regard to ESG, I'm quite curious to see how it is evolving in terms of the impact of higher interest rates, because obviously ESG has come down from the number one spot of the board agenda, and it's going to be interesting, of course, how high or low CapEx spending for ESG related aspects could be moving forward.